Hello, Warriors. How's everyone doing? Hugo, Jays, Ryan, how's it going, buddy?
Morning, Dale. How are you, mate?
Okay, Sinatra, Jatine, Jack, welcome to F.A.C.E. Okay, let's take a look around here. And was talking to Ryan yesterday. I know my charts aren't up yet. They're coming up now. So we were talking about this yesterday, Ryan, this 940 level. I know you were thinking, over 860, and it proved that, and it's pulling back to it. So inside candle, but look how that horizontal old support, new resistance held it so far.
Yeah. One of the steps. I did a bit of analysis in the room today. Small steps, if you zoom out a bit, things don't start getting interesting until 112, 113, that sort of thing.
Yeah.
But we've had another couple of ECB hawks out that drove the move. ECB's Wanch, I think you say it, the Belgium guy, and the big one, Vice President de Guindos, coming out saying that he thinks a July hike is now a possibility. I looked back on his past speeches, and again, back in sort of February, March, he was a bit more cautious. We need to end QE first, and then we might think about hikes. But now he seems to be squeezing it all in again, like the others. So
yeah,
it looks like a turn.
Tomorrow's close may be important. I look at 2-week reversals. So earlier in the week, it didn't look likely. Now we're pulling back to it at 108.76. So we close there tomorrow. That'd be, 2-week reversal. It's, usually a decent signal because, that's 10 days of memory to the left.
Yeah.
So, that's something I'm looking at. Same thing with the dollar, getting a little bit of a reversal week, but kind of held here. But, we could be near the, this could have been it yesterday in the dollar. The yen, someone was asking me what I thought of the yen. I said, I can't buy it and I can't sell it.
Yep, exactly.
I feel real late getting long, and yet look at this momentum. Hard to fade it, and wish I had paid attention to the momentum when it was here. So, we did confirm highs on almost every time frame.
Yeah, I think you've got to wait for a bit more confirmation of where support is in dollar yen.
We're 27. Or let's go to your 15-minute.
Yeah, down towards that 127.
Yeah.
But the problem is right now you can't trust it. So if you're going to try those levels, keep it fairly tight, because if it's going to blow through 30, 40, 50 pips. If you're itching to short, look for another move up to 129, maybe towards the highs. If it gets up there and it can't quite get as high, can't quite hold, that's your clue to try a short. Again, keep it tight just above the prior highs. We know there's barriers at 129.50. We know there's exporter offers at 129.50. That was, a big part of the reason why we stalled there. That's
BOJ
where
BOJ next week.
BOJ next week, yeah. So again, how far is it going to walk before then, unless we get some big speakers out or some other news?
If there was going to be intervention, maybe you or Kman, where I'm opening an account offshore at Cayman Islands, could comment on.
I think of the Porsche Kman, but anyway, I'm just a car nut.
Yeah, that's interesting. Yeah, that's a good, real cool car. So, would they intervene before the BOJ or after, if they are going to do it? What do you think?
We're stepping a bit closer to intervention, but we're not there yet. I mean, when they talk about intervention and unruly markets or undesirable moves or whatever, you're talking when it's flinging around 200-300 pips in a day. This isn't it. It's a big part of their mindset is the volatility. If there's huge volatility going on, that's when things will really ramp up. But otherwise, this is just the market moving, and they're not going to touch it. Whether they touch it into the Bank of Japan again, if we go really volatile, then perhaps. But I can't see them doing it. We're just going to continue to get the jawboning, and that we've heard from Suzuki again today, the finance minister. Pretty much the same old line. So they're not stepping up the rhetoric yet. They're keeping the same things bubbling, but not a huge step up in that sort of talk.
Pretty ugly week in the gold, working on this descending triangle, trying to hold the 200-day right here. So, and even uglier week in silver, headed most likely to 24, and that's going to be, like I was saying yesterday, pretty important. And it looks like the gold-silver ratio is trying to come out the upside here. So metals really had a chance to turn good this week up here around 2,000, and here we go. I don't know what finally did it, huh?
It's a similar theme, isn't it? We're seeing that seeing that today in the euro. It takes off. You get some decent reasons to buy the euro. I've been saying I had a decent reason to buy it. Get a decent reason today, and it can't hold it. You can say the same for the metals there. We had the spike up. Okay, it came over the Easter break, but it can't hold the gains. So you got to think, if it ain't going up, which way is it going?
We are chopping. We are chopping. That's the thing. We said that yesterday, the day before. We are chopping. We're not breaking down or breaking out. So
still in the formation.
Yep.
But you look at a weekly candle like this, and I don't know if I would buy it on a weekly close down here. So, there's just a possibility this was a failing rally, and why can't we have something like this from a lower level? I think that would take us down to about 1830 or so. Also, yields. Blake was talking about yields, and they did have a pretty negative day yesterday. And TLT, I think Helene posted that, Meisner posted that. I think we need an ambulance. TLT was green yesterday. So, I think it's the first up day in a while. I can't buy it, even though I'd like to, because of all the confirmations of the lows here. But tough trade. There are a lot of things where the rubber band has really been stretched. On the bond break, on the yen rally, on the yield rally, really dramatic moves that I've seen on Twitter. A lot of people said they haven't seen this type of velocity in yields. Like the last time we got up to 3%, it sure didn't happen in the same fashion that it did this time.
Yeah.
You think that's
Good morning, everybody. We did see kind of moves back in the days, Dale, but from low levels that we have been in now, compared to where we go, the amplitude in percentage-wise compared to where we are is violent, right?
Yeah.
That is indeed is something that we rarely have seen. And I saw you were looking at these iShares 20-year Treasury bond ETF.
Yeah, right here, TLT.
Yeah, the reason why it's green, I've been told early this morning with some delay that the Japanese accounts have been really going very hard into the 20-year Treasury auction the day before yesterday, and that might have put a bit of a cap on the yields in the 20 years. Of course, they're getting yields above 3% now after having been severed from any yields for a number of years, and since they are the biggest investors in.
Amazing investment, Kman. So they're only going to be losing.
They will be happy to get 3% or above 3% on some of their.
That's a great investment. Only losing like 3-4% on your money.
I actually heard an argument that because they are the second biggest holders of treasuries, that they may have to sell them to defend the yen. Is that a possibility?
It's possible, but the biggest holders are the Japanese Post and Japanese asset managers. Is Suzuki going to ask them to sell some of their bonds? Well, maybe they can ask the Bank of Japan to do so, or
who's going to buy them?
It's a possibility, because we are not used to see them intervene that way around.
Yeah.
So they will have to do something. But they're sitting on 1.3 trillion for FX reserves. I mean, before they start to really have to do something about their US bond holdings, I think there's going to be time.
I really don't understand why the Japanese are going all in a very bad trade. I really don't understand.
Yeah, but they are
unprecedented times.
They are not in there yet, right? We are just looking at the possibilities, what they might be doing. They are not.
Oh, no. I mean the opposite. I mean, they're still buying treasuries. In my opinion, that's a so bad investment. I mean,
that's what they have been doing for the past 30 years.
Yes, I agree, and that's why my statement was, I don't believe that they're in essence doubling down on a very bad bet.
We're still April, and they receive fresh investment money in April, so they have to do something with it. They are not.
Yeah, and that something, in my opinion, should be anything but buying treasuries.
Bitcoin.
Steve wants them to come in and buy gold here.
Oh, I think.
If you're asking me if I was the central bank, if I would rather be buying gold or treasuries, I don't even need to answer that, should I?
No, I don't think so. Anyway.
I heard your desk is made out of gold, Steve.
Of course. So stay away from my desk.
Having my nail file.
Goldfinger. He's like Goldfinger. What do you guys think of risk here?
I don't know what it's doing.
Technically speaking, it seems good.
Strange here, in my opinion. But the real test, in my opinion, for equities will come when a Fed starts QE. That I've been saying it a couple of times, and I think that's where the real test will be for the equity markets. If they hold up, not a lot will bring them down, but they might top right then.
All right.
But they sure are resilient, aren't they?
Yeah.
These equity markets.
Yeah.
Oh yeah.
Man, they are super resilient. I was talking with Chris Weston last night on the Pepperstone show that they have, and we were just talking about how resilient it is. Imagine if yields come down a little bit here. I mean, if we start to see yields come off, that's just going to provide a little bit of a tailwind, and you have to look at a lot of these stocks, and I mean, how many people are value shopping for Netflix down here?
Yeah, not Bill Ackman. Not Bill Ackman.
Well, not Bill Ackman, of course. He's getting out, so everybody should be getting long right now.
What's interesting here, Blake, is you're looking at a lot of people. I know you don't believe in them as continuation formations as a head and shoulders. But look at the fractal on the 4 hours. So the right shoulder is also forming the head and shoulders.
Oh, you know what? I'll take over the charts here, Dale, because you actually hit the nail on the head, because this is what I was showing yesterday on the trade-off show. I was like, hey, look, I don't play head and shoulders like these. I wanted to point it out because I wanted to, just show everybody, that people will be looking at this, and you have to understand the reason why and the psychology why. It's like the Pavlovian response on pullbacks. People look for inverted head and shoulder patterns to play, even as the market's been so bullish over the last 12 years. It's just like, hey, it works, right? It's bad habit, but that doesn't mean that you've been rewarded trading with bad habits for the last decade or more, right? So people are still going to look at this. I just don't think, I look at the S&P, and I'm with you on the, possible head and shoulder developing here, that we're looking for a move higher in equities. But I would be really, really hesitant. But like, on the NASDAQ, I'm looking for, move back up towards the 618 retracement. I mean, this is where theoretically, like here, if you can just see it right. Let me move this number. Let me move that fib real fast. Like if we can get a move back to the 618 retracement right into this zone, it won't complete the inverted head and shoulder pattern, but it'll get enough people long through these levels right through here, where we'll end up stalling, in my opinion, as we close in on there's a 200-day moving average. You'll see it right here. The 200-day moving average will come back up. This is a daily chart. So, we're going to start to see, I'm sorry, I had it drawn out on the wrong chart. Let me take that back. So there's the NASDAQ 100. There's the big head and shoulder pattern. I was looking at an intraday head and shoulder pattern, but there's another head and shoulder pattern. We'll take us back to the 200-day. And this is where I'd be more worried about trying to be on the long side, because I think people are going to try to play the breakout. And I think it's gonna stall. But that doesn't mean. But if you look at the distance that the NASDAQ can travel between here, current levels, and that 200-day moving average, that's a 6% rally from here. Again, I think that with yields coming down, or let me rephrase that, with yields stabilizing, right, at these levels, stabilizing, I would think that the 10-year is probably going to be, somewhere in this neighborhood, with yield stabilizing and with value shoppers coming in, looking to buy some of the stocks on the cheap. I think you're going to see, I think you'll see the NASDAQ rally a little bit, and you'll probably see the S&P, come back up towards the, 4,600 or so. What do you guys think there?
Hey, Blake.
I wasn't really looking for a response from Grega, but since he's here, I guess we'll take it. Good morning, Grega.
Actually, I think that this consolidation from start of the year will continue. I'm looking for potential even for a triangle that could be in place. So I agree. I mean, that breakout point that everyone will try to follow, if you look at this head and shoulders pattern, may not be so easily to play on the long side. So I would be very careful up there as well, around 4,600 around there.
Yeah, and look, I'm just referencing how everybody looks at these head and shoulder. You can see one right here. Yeah, you guys know I don't like to play these because head and shoulder patterns are reversal patterns of extended moves, right? So what I'm more in tune with as far as head and shoulder patterns go, let's just be clear here. I'm going to go over to my other S&P chart. This is what I think is playing out, right? So if you think about what we've got here, and let's just remove this shoulder for a second. Let's just push this back over here where it used to be. So if everybody at this moment is looking for something like this, let me grab my, I'm just going to grab my drawing tool here. So if everybody right now is looking at, there's the shoulder, there's the head, there's the shoulder, here's the neckline. I think we're going to end up being stopped up there, still developing that longer term head and shoulder pattern that we've had drawn out for months now. This has been this way for months. And if you look at it like from a time perspective, like this, you try to get equal legs in time, especially when you're looking for symmetry in a head and shoulder pattern. 2-3 weeks from now, we would basically be looking to carve out the complete right shoulder. So like you said, Greg, I think it's going to be very difficult for the S&P to get much above the 4,600 level. So
it's like a year of distribution on that chart, Blake.
Yeah. Wait, what's that?
It looks like one full year of distribution.
It really does.
Being distributed. Yep.
Yeah. And when I look at like this head and shoulder pattern, something that looks like this, and John Philippe said, yeah, you got to really wait for the neckline. I mean, this is where the head and shoulder pattern really comes into play. I don't believe, and I may be wrong, and I'm kind of hoping I'm wrong, but I don't believe that we're going to be playing out this entire head and shoulder pattern. I mean, that's a big move. I mean, if we saw a move down to 3,300 over the course of the next, let's just say 18 months to 2 years, because this isn't going to happen like tomorrow. This is going to take a long time to play out. If it does play out, I think this would be like a, year and a half, 2-year type of process, right? I don't think it's going to be just a flush. Like, we've seen, up on an elevator, down on an escalator type of move. I just don't think that's it. But really the head and shoulder pattern needs to take out the neckline. And that's what he was just mentioning there. But, overall, I think we are in a range, and I think you have to be really careful chasing the market higher, and you got to be really careful chasing the market lower as well. And that's why, as we're kind of, getting towards the upper end of the range around the 4,600 level, that's when I'm going to start to look to fade. And let's not forget, and I have to say that the markets are very resilient right now in the face of rising rates, rising inflation, and central banks that are, obviously tightening globally. The markets are holding up very well, but that's also the reason why I think it's going to prevent the market from actually hitting new all-time highs from here. So do you guys have any other thoughts on the equity markets at this moment?
I'm just playing very, very short term here. The moving averages, 200 DMA, 100 DMA, bit of a small flag around perhaps. But if I'm wrong, I'll take my 20, 30 pips, I'll eat them and move on.
I think that's the way you have to play. I actually was short the US dollar South African rand overnight, but I knew where my risk was. My risk was above the 38% retracement. It was above 15.15, and I got stopped out. And I don't mind getting stopped out with small losses as long as you know where your defined risk is. And so
I mean the thing, it came a little bit together as well with the Windows and Wunsch on the lines, taking euro yields up a bit. I said, like, well, perhaps it's going to weigh a little bit on the stocks. And then if you look at the DAX, it rallied only 1.5% this morning.
I know, it's a weird, isn't it a weird market? Hey, I got to show everybody at Kman that the euro, you're wondering why, the euro turned. Now, as soon as I stepped in this morning, Ryan made a cheeky comment that, Blake must be awake. The dollar is firming up. And it is true, though. You see a lot of the reason why I get up when I get up. It's like I get up at the 3 o'clock hour. It's because I know that it's a 6 o'clock hour in New York, and all the traders, on the East Coast are starting to get up in front of their computers. And, that's when you start to see Europeans take positions off the table. They take profits off the table around that same time. So you got to, be cued into that. The thing about the euro is you look at the reversal that happened this morning, and then the dollar starts to firm up, and you see that reversal. We had a double bottom play out on the euro. If you guys are in the ForexAnalytix community, we've been looking for 109.25. That would be, here's our resistance. If you go over to the bias chart, we do this every day. The euro dollar 109.25 was resistance that we talked about yesterday, because it was a double bottom completion. You can see that trend line that comes right into here. If you guys are keen on that and you watch this move, up to 109 and 109.30, I know it overshot it a little bit, but that's the markets. It's not an exact science when you're talking about technical analysis. But if you're looking at this failure up here, it gave you a nice little entry. Now, I wouldn't want to necessarily be short the euro at the moment, because I think it's had a decent pullback. There were some fairly bullish hawkish ECB comments that came out overnight. So what were those comments that were made by some of those ECB members? Kman, you just said it, but what did what's his name? Guido, not
Windows.
What did he say?
It could be supportive for a July rate hike, and so far it's a guy who doesn't even have the right to speak during ECB press conferences by his mistress. And then now all of a sudden she took his muzzle off apparently, and he said that he might be supportive for a rate hike in July. He's usually dovish. He's usually Lagarde's Muppet, same as Villeroy, and Wunsch was a little bit less in that camp, but he said that ECB might even go a little bit restrictive into the end of the year or the beginning of next year. So the market, I think, is naturally trading euro a bit from the short end. So it was like cover it and get out of some of the weak shorts.
Okay, and really, I mean, if you're looking at this, really, we have to make it above 109.50, like this previous support, really, to get the euro moving a little bit. And actually, I would take it even a bit further, maybe above 110, 110.20. This trend line.
Just saying for the next few hours, because I'm watching the price action here. We got up to that sort of 30-40 area. We're down to the 108.70 area. We got a big option expiry today at 109, 3.31 billion. So the fact we gyrate within 20-30 pips either side of it right now after the comment move might suggest that right now we're just playing a bit.
Who cares about $3 billion? I mean,
we're pinned. We're pinned,
man.
Come up
with a better excuse.
Guys, it's so funny not funny. It's really interesting to hear you guys talk about, the next 10, 20 pips and all that, and the head and shoulders and everything. My view.
Are you calling us cute, Stelios?
You are cute.
It's just so cute. So
my
cute.
view.
So cute. You guys talk about these little technical patterns and stuff.
For
I'm going long gold, but I'm going to be long gold.
Intraday, all that. Yes, I'm with you. I just want to say my conviction on euro being strengthening in the next, I'm not going to say day, week, but for the rest of the year is still strong. I think that it's going to surprise a lot of people. And you have to remember, today we had Eurozone CPI 7.4% year on year. Okay, we were expecting 7.5, but whatever, same thing. This is up from 5.9 last reading, and there is no signal or no sign of this slowing down. Not yet, anyway.
But I've heard the same argument from you since the beginning of the year, Stelios.
Well, you see, slowly people are starting to talk within the ECB. You see, you have the Guindas, you're going to have the whatever, all the other people. I think the market's going to get shocked at some point because the ECB is going to turn, and I don't care if they're going to hike or not. I just want the market to price it, and I think the market will price it. So I put out two patterns in play this morning: euro pound and euro sterling, euro pound and euro dollar. Sorry.
Wait, did you go long euro sterling?
Yes, both.
Oh my God! I just actually sold my euro sterling this morning. I didn't look at the pattern.
My timing is never perfect. Far from it. So you're okay. But I just feel that this move is starting. Yes, we could go down 50 pips or 100 or whatever, but I think we're getting to 120 in the euro dollar, and we're going to get to 90 again in euro pound.
My goodness!
That's what I think. That's what I think. Obviously, I trade in a very different way than everybody else does. But when the market is one-way pricing, 200 basis points in the Fed and pretty much nothing in the ECB, I love to get the other way of that.
All right. Because anybody got anything else to say to add to this conversation here?
75 BPs for the ECB. The market's already this morning 75 BPs hikes already priced for the ECB.
Yes, that is true.
Yeah. Okay. Fine.
Until the end of the year.
Wait. What was that number?
75
really?
basis points.
The market is pricing 3 after.
That changed a lot overnight after those comments.
3 times 25 BPs.
Wow.
By the way, what rate? Deposit rate or the main rate?
Oh, come on. Really, Ryan?
Well, you got one that's sitting on zero, one that's sitting on negative.
People calling me the Yoda of trading. Listen to me, you must. Yes. That's a very bad impression. Sorry.
All right. Hey, guys, we do have Philly Fed coming up here in a second. I know Dale's got his interview coming up. Let me just say really quick, if you guys haven't checked out the Trader Funding Program, we actually had we had actually a Trader Co live yesterday. We had like 6 or 5 last week. It's great. You take an assessment. That's what you have to pay for. But if you pass the assessment, you can actually access larger trading accounts. And it's pretty cool. It's great.
Blake,
okay, I'm sorry.
If I'm not mistaken, we've already had in the 2 months, people cumulatively make more than a few dozens, thousands of dollars. Am I right on that? Stelio?
I can't remember the number, but yes, there are the people making some pretty serious money out there. So,
yeah, so that's great.
it is good.
Yeah. Hey, let's keep an eye on the yen as the data comes out.
No, not billions. Steven says billions.
Of course.
Billions.
Billions.
Okay, so did we get the numbers?
Let's see
Did we get
here.
the numbers? Philly Fed 17.6 versus 21, estimated down from 27.4. So that's not a great number.
Yeah, it's not really moving.
Jobless
the
claims in
sorry.
line.
I thought
Yeah.
I had the data flash running over here. Sorry about that.
And also look at the sub items. New orders down to 17.8 from 25.8. Prices paid up from 81 to 84.6. So that's not good.
Stelio, did you mention yesterday?
Job.
Did you mention yesterday the German PPI?
No, I didn't.
Anybody had a glimpse of that?
Yeah, I saw it was like 35% annually.
Yes,
30.1. Yeah, that's nice.
30% year-on-year PPI. Guess
Guys,
where that PPI is going?
Peak inflation. Come on, peak.
Yeah.
No, I'm kidding. Anyway,
peak,
we have
peak inflation with a leading indicator of inflation being above 30%. Just put that number in context, right? I mean, it seems like a fake number, right? But it isn't.
Yeah, they're probably having nightmares of like the 1930s.
Yeah, we're not there yet, but you know.
And they were always the sound money people.
I'll reiterate once again. I told you in advance, when Weidmann quit, in my opinion, he already had the debate, because they know what's coming, right? So he already had a debate. Listen, guys, I'm not on board if we don't do something about it. They obviously told him we can't do something about it, or we're not willing to do something about it. And he quit before all these numbers started hitting, because he obviously was decent enough not to want to have these disgraceful numbers under his watch as a central banker, right? Because when you're a central banker with one role only, like in the ECB, which is price stability, and you start getting like PPI numbers of 30% and CPI numbers of close to 10%, and you're sitting on your hands, I mean, right?
Sounds like Jay Paul.
Yeah.
We have a new guest here.
Yeah,
today.
let's let the guest speak. It's way past our time. Dale and team, I want to say thank you very much. Also got to just say really quick, because we were talking about in the chat room, the BlackRock Bitcoin bid is still in play. And looks like we're going to see this 161% extension. Start looking for that maybe like 44K level. I think this is going to offer some resistance going into this next week. But remember, BlackRock's out there buying. So there you go. All right, guys.
Thank you, Blake.
Enjoy the interview.
Thanks, guys.
I'm all for rock. So Relja, welcome to F.A.C.E. Really,
Hi.
well,
Can
very
you hear
nice
me?
Yeah, I can hear you. Very nice to meet you.
Very nice to meet you too, Dale.
All right. So did you bring anything that you want to talk about? There's a screen share option here on Zoom at the bottom.
Yeah, let me just find where that
so you
is.
just scroll it at the bottom. You'll see the green box. Okay, no, that's your video.
Yeah,
Okay.
yeah. Okay, share screen.
Did you want to,
Share screen. Yeah,
the
okay,
bottom.
screen one. Share. Yeah, okay.
There you go. Well, there's your Twitter page. Okay, there's we're looking at what DAX now. We've got them up. Looks like you do some very interesting, intricate work. So Relja, where do you trade from? Where are you?
Yeah, let me introduce myself properly. I'm coming from Serbia, and I know that most of Western people cannot really pronounce my name correctly, because you said Relja, and everybody calls me Relja, from UK and from America.
Is it silent? Is it just Relja?
It sounds like I'm from Pakistan, but actually it's Relja.
Relja. Okay.
Yes.
Got it. It's easy.
And that's why on Twitter, I call myself Stray Dog, because I know that Western people can pronounce that, but it's not because I want to be anonymous or something, because on my website you can find everything there is to find to be found about me. So I'm not hiding, but the name is maybe a complicated thing for Western people to pronounce.
Okay, Relia, I got it now.
Yeah.
So why don't you tell us a little bit about you before we get to the markets? It's always interesting for me to hear how people got involved in trading. What were you doing before you got into the markets and became interested in trading for a living?
Well, I can really be sorry that I didn't find trading before, because I started trading when I was 40 years old.
Okay.
And before that, I have been involved in various jobs. I worked at one of the trade unions as a computer person, to teach others how to use Windows and Word. And I used to work in the newspapers as well. My late father was a journalist. So I started to work on a scanner first to scan photographs for the newspaper. Then I started to work as a graphic layout guy.
Yeah.
At the end, I was a chief graphic editor in one of the most popular women magazines here in Serbia. And when I was there, I also worked for another news agency in the evenings. And that news agency had a special newsletter on English. On last pages, there was like a report from Serbian stock market.
Okay.
And I was working with one guy. He was an economic journalist. And just like that, he was not there anymore. So I'm working for months and months with some other guy, and at the end I asked, okay, where is Miroslav? Where is that first guy? I was working with him. We became friends. We still are. And he said, Miroslav said he wants to be a broker. So now he's a broker and he's made like a bunch of money and so on. And then I asked, what? What he did do? Where is he working? So that was in 2004. And my first trade was in 2004 in August. I bought some shares of a company here in Serbia, which produces a kitchenware and boilers.
Yeah.
And that
it's
period.
A great story.
Yeah, that period, like in the US markets or like in other stock markets, that period between 2004 and the great financial crisis was basically all up. You just buy dips and you make sure, because on the Serbian market back then and now is the same. It is a long-only market. It's extremely a small turnover there, a small volume, and non-liquid, not liquid market. The biggest mistake a man can do there is to be engaged in something that you cannot sell, something totally not liquid, and then you're stuck. And your position is you can count that as a zero, because you cannot sell it. But it was for me and for other people involved back then who knew how to find cheap stocks. It was a paradise. And a few years later, brokers where I had the account told me that, you know what, really, you're talented, and you should go to our own F.A.C.E to finish the course for brokers, to get that education and to work with us, because you can find those undervalued stocks. So I did that, and then I have worked as a stockbroker for Serbian market for 4 years.
Okay. So, was that a lot of asset collection and making cold calls to get clients, or were you on the trading desk there?
I was at the trading desk, but stockbroker in Serbia is a bit different thing than than what we can see in US movies. Because on one hand we were treated like from the employer treated us like we were some clerks in the post office. You just you have your stamp, and you then make contract with the client. And take their orders to the market, and you put your signature and you put your stamp on it, and that's your job. And plenty of people took that job like that. You have a fixed pay. It was similar like a postman in the post office. It was really nothing much like a very.
Your boss wanted you guys to mail a lot of letters to generate commission.
It's an average. It was an average pay, and a few of us were really into the market. The people that were trading for themselves and that were into the market, into the all came to fundamental analysis, to find the companies that are profitable and to be able to dig out those earnings, not earnings reports, but more like financial stuff before others. And if you do that,
so I see, here we're looking at your evolution. Did you have any major influences that or books that you read for learning how to chart and use candlesticks and fibs?
It's very interesting that first period of my trading, that first few years, which was only fundamentals and only through scanning, the data of the companies. I didn't even realize that I'm doing the things that much later I have found out that Mark Minervini, for example, is speaking about. He's speaking about making the turnover to go in, go out. I was very active in trading. I made a big turnover, but I didn't even realize that that guys exist. I didn't even had a reason why to check US markets, because our market was a paradise. And then all of a sudden, it was not just all of a sudden, of course, when the great financial crisis hit. It was a slower process, but at one time, it was like somebody just turned off the light and that light was never turned off again. I sensed that in the autumn of 2007. In October, I told my clients and the people which I was managing that I'm going to close slowly everything. At first, they couldn't believe. Some of them called me a coward, but at the end, even before there was a really big drop on US market, our market already was having a hard landing, and then it was too late.
Right,
because nobody wanted to buy.
You avoided that. Did you avoid the COVID crash?
I avoided the GFC, but I avoided that by losing. For example, I lost like a third of, because euro was going up, Serbian dinar going down. We had lost like 20% just on that. Everything was in Serbian dinars, but when you calculate your portfolio, you're obviously going to calculate that on some other currencies, and euro is the number one here. So we lost on that front. Then we lost because stocks went down. Then taxes went up. So everything was basically against you.
Yeah.
So, when you are losing money, if you made money before, then you're losing from your gains. But if you entered too late, like in 2007, for example, we had lines of people, literally lines of people in front of the brokerage every day. And
watching it. Yeah.
And when you see that the guy has the newspaper, under his arm, he's carrying the newspaper, you know what he's going to buy. He's going to buy the stock which went 20% higher the previous day, because he thinks it's just going to go higher and higher and higher.
Yeah, like the yen, US dollar yen.
Yeah, a bunch of people bought in the wrong time, and they're still stuck.
All right, well, okay. What did you read some books that taught you how to trade technically, or you're self-taught?
Yeah, mainly, when all of that gone and crashed, I thought about moving on because there was nothing really to do more on Serbian market, both stocks or bonds, and I wanted to be like a citizen of the world. So I thought, let me go and learn technical analysis primarily on dollar pairs, forex, euro dollar, dollar yen, and so on the things that are most liquid. So I found a trader. I will call him, because he's not trading anymore, I will call him Mr. B. And Mr. B was a trader, Serbian trader for a small town in Serbia. And he was very good. And he told me he taught me some of the basics of technical analysis. And then I moved on myself, on the patterns, and most of the things that I'm now dealing with and teaching others is classic technical analysis, like Wyckofian principles. And most of that I have teach myself. My favorite book, for example, you asked me about books. My favorite book is Trades About to Happen from David H. Weiss, especially the parts about false breaks, about springs and upthrusts, because those are the ones which the DAX traders are dealing with on a daily basis. DAX is in my opinion, old school instrument, which often lacks volatility or strength to make a bunch of real breaks, and it often just makes marginally higher highs or marginal lower lows and goes back to the range. So majority of our opportunities are those fading the ranges.
Okay, so I see you use fibs and some moving averages here. So what are you seeing in DAX?
This is daily chart behind. This is cash. This is index. This is futures. So I'm not really a big fan of the moving averages, but I am using it on daily charts. So industry standards, daily 50. DAX closed yesterday at the daily 50. This is today. This is daily 200, this red one.
Right.
And I'm using that as a gauge of a strength. And as I said before, DAX as in my opinion, old school instrument, it is reacting quite good on daily.
Why do you think it's an old school instrument? And would you say that of all the stock indices, it's more old school? Why is it more old school than, say, S&P?
Yeah, S&P is S&P is old school also, but not. I think, I'm biased, because I'm trading mostly DAX. Obviously, I'm biased. But
I just want to know why. You're not the only one.
On the S&P, which when we are talking about S&P futures as the most traded futures in the world, where everybody and their mother is using the market profile and all of the modern stuff, AD line and everything.
The ETF, the spiders.
There it makes sense then to join the crowd and to use what everybody else is using. On DAX, there is less volume, and DAX is very responsive to the common zones. So for example, I will show you my zones, for example, for today. Let's go on futures, because I know some people are allergic on CFDs, but in Europe, many of the traders are using CFDs. So this is the futures on DAX, and this was for today. My usual coloring, this orange box represents the pre-market range, and DAX actually didn't have a pre-market range for many years like US markets have. It only got the extended hours in December 2018. Up to that time, pre-market for us was just between 8 and 9 a.m. And from 10 p.m. down to 8 a.m., there was nothing. And now we are having, so now it's a summertime, and it starts at 2:15 a.m. and up to 9, we have the pre-market range. Then I like to extend that rectangle to the right to see later how it responds to it. So this is now a very small picture, but you can see how, for example, this is 915 candle, and how they poked above that range for a bit only to go back inside. But this is not really a representative example because the reaction here was very small, but this is something that it does regularly, almost every other day. And those kind of setups that are connected with pre-market high, pre-market low violations of those levels, we got them from the S&P and from NASDAQ.
Okay, so it's like an opening range trade.
Yeah,
and you go with the breakout.
Because you see when market is trending higher, and it offers only like shallow pullbacks. You're going to see, especially on S&P and NASDAQ, how they're just making a dip toward the pre-market low, then they dip like 2 points below that, and boom, higher, and they're making that same bear trap over and over again. And when time passes by, you ask yourself, but how come people don't see this?
Because I'll tell you why. A lot of people don't look at 5-minute charts like you do.
Yeah, maybe that's the case also because I'm a day trader dominantly.
Okay, well that's why you do. So that's a difference. A lot of people are discouraged from looking at short-term charts because they try and swing trade off 5-minute charts or 15-minute charts, and it's a scalping time frame. Don't you agree?
Yes.
Okay.
I think people need to know what they are. It's very hard to mix both, to be day trader and swing trader in the same time. I think it's better to, for a trader to just decide what he or she is, and sometimes making a move from day trader to swing or vice versa, or just changing the instrument can do wonders for you.
You know how a day trader turns into an investor, right?
Yeah, I know that because I have seen that. I have seen that. I'm going to tell you a little anecdote.
Because I've done it.
Everybody has done that.
Sure.
2-minute anecdote. I'm coming to my work. I'm working at that time as a prop trader. And there is a position on DAX open on my account on futures. And that position is down like 50 points. So I'm asking my boss and the owner of the company, what is this? He said, I made it. Yeah, I said, yeah, I know you made it, but the position doesn't have a stop loss. The idea, what is this? So he said, I wanted to scalp. I wanted to take 20 points. Okay, you wanted to take 20 points, but now the position is down 50 and I still don't see a stop loss and it is on my account. So he says, don't worry about it. Don't worry, you just trade the mini futures instead. Just leave that. Several days later, we are closing that position for minus 500.
Yeah. Why did he put it in your account? He was your boss?
Yeah, but his account was already stretched,
All right, that's why.
He had many positions on other stuff.
When people say don't worry about it, I really get worried. How about you?
Yeah, me also, because, but I see that with myself and with other traders as well. Okay, the ego in trading is always high, and the vanity is high in trading. Everybody knows everything the best.
Hubris,
yeah, but if you are not able to cut down the loss, as Ed Sikota said back in the time, you will going to meet the mother of all losses.
Yeah, he plays a great banjo. You ever hear that song that those guys do?
No, but I'm sure I can find it.
He was in a band, and they did a kind of a market song. It's really good. It's like my generation. So you're a day trader.
Yes, I'm a day trader, and DAX is my bread and butter.
Okay, got it.
Beside DAX, I only trade a few times per week S&P and Nasdaq, and only when they are moving, when they are not in the range, when the volatility is slightly bigger, and then I can find some easier setups for me, because I go up at 6 a.m. Central European time, three hours before the open, to prep the charts, to make a preparation plan and everything, and then US markets open at 3:30 p.m. and by that time I need to make a few breaks, to take a nap, or to be ready for that if I'm going to trade it at all. I also have a family, so I cannot really trade all day up to 10 p.m. and then I take usually a few trades on S&P and Nasdaq per week, and I'm trading DAX every day. I also pay a great attention on correlation between DAX and the S&P. And for example, this here, what we had here, these few days of market staying in the range, basically accumulating before this push higher. The same was on the S&P, but S&P was laying here on the halfback of this up move, while DAX was on the 48.2, and Nasdaq was at 61.8, for example.
Okay, so it was showing relative strength compared to the U.S. indexes.
Yeah, you can tell it like that. I like to not only to look at DAX like this, like index and futures, but also to oops.
So do you have a business model, or are you just trading your own account? Do you teach? Do you have a letter? Why are you on Twitter? Why are you on Twitter?
I was on Twitter first to share some charts and to see what others are sharing. And when I started to share my stuff and to make some recap videos, I had like 700 followers maybe. I have seen that people were liking my work, and that there is basically nobody back at that time, that was like 3 years ago, who is offering some kind of newsletter or some kind of subscription service or something like that. And I thought, let me try to do this. It could be a way to pay my electricity bills or something, because this is a small niche. This is not something that everybody is trading, and there is a lot of services and other stuff for S&P, for US stocks, where everybody is basically. There is not a big interest in DAX, but there was for this, and I am successfully having a service for like 3 years.
Okay.
And,
all right. So it was a pleasure meeting you, Relja.
Yeah. That's like a additional income for me.
Yeah.
Okay. But basically nothing can really make bigger bucks than this.
All right. Well, it was a great story. Thanks for sharing your journey with us today, and a couple of looks. Will DAX make new highs or put in a failing top? And since you're a day trader, that's not the right question. So
but you can see this, and you can make a parallel between this and the US Russell 2000. It also had a 10 or 11 month range, and once they broke down, for example, this, let me just turn off all of this, and we can see with our bare eyes, this was a resistance, now support, and here made to a resistance, and Russell had the same thing on the very same day. But before, for example, DAX had this, what people like to call golden cross. Russell did that like months before.
Yeah. DAX looks like it could have 15.2 in it to me.
They are not correlating, but you can see some connections between the patterns itself, and that's why I think it is a good idea to always monitor US markets, especially S&P. And for your question, when we had this, it already broke the support before the Russian invasion of Ukraine, which happened around here. So it was making lower highs. It was already here these moving averages were converging, and it already made lower highs. It already started to repeatedly test that support, and everything was telling that this is the next thing, especially because Russell already did all of that.
Right. All right. And,
I think if it is holding here, it could attack again this level, and then we are going to see what's going to happen.
Okay,
I'm going to sell that.
you ought to change your handle from stray dog to pedigree. All right. So anyway, you're not a stray dog because they're out there. They're just eating garbage. And sounds like you graduated from the University of Hard Knocks, and you know how to trade now. So congratulations. And everyone who's seen this live or the video later can follow Railja at Stray Dog, even though he's a pedigree. And since you survived an interview with me, you're now my trading warrior brother.
Yeah. Well, okay. I like to talk a lot, so
we'll have you back.
I think you survived.
I survived.
Huh? Yeah.
Yeah, I did. I guarantee you, I've had. I stepped on a few landmines in my day. And that's my mission, to help people avoid doing the same thing.
I'm sure.
All right. So thank you for your time today, and good hunting. I'm rooting for you. And what do you think? You haven't done many of these. Why don't we give it another go later in the summer?
Yeah, sure. Okay. I didn't. This is my first interview.
You did great.
First with the strangers.
It's a good thing you're not shy.
Yeah, I'm not.
All right. Okay, everybody, that's a wrap. Follow him. I'm going to tell me if I get the name right again. Railja. Huh? Raya.
Anyway. It's a good try.
Maybe by the next interview, I'll have it. Raya.
Yeah, you can call me.
All right, Raya.
Straight up. No
Raya. And thank you very much for being here, and it was nice meeting you. And
thank you for having me.
Yeah, we'll do it again, buddy. All right.
Okay.
That's a wrap, everyone. We'll see you tomorrow and the week. TGIF. Good hunting the rest of the day. And you could join the team on the Morning Edge in 13 minutes. Remember, don't just count your pips or your DAX or your SPOOs. Count your blessings. We'll see everyone tomorrow. Adios. You're very welcome.
Adios, amigos.